Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, April 14th, 2021. In this video, we'll go over some short swing trade ideas. A lot of these are setups. Some of these can actually be actionable trades now, depending on where we're at. The last video, I did some long side trade ideas, and I spent quite a bit in that video kind of painting the bigger picture of the market, the longer term charts. So I'm just going to start out with the short term charts here and not spend nearly as much time. I just want to do a quick update because again, this factors into the timing on long and short trades, or helps to confirm or maybe refute an entry. And again, that is largely but not exclusively dependent on how these individual stocks that I'm about to cover, whether or not they're components of a major index or highly correlated. Maybe they're not a component, but they could still be correlated to such to the indexes or not. And so what we're looking at here, the S&P 500 futures, this is ES, this is the 60-minute chart I've been highlighting recently. You know, simple stuff. You look for these divergent highs and corrections follow, divergent lows, divergent high, divergent low, divergent high, divergent low. And our most recent rally with negative divergence building. So my expectation is sometime soon for correction. And I always say the divergences are not sell signals. They can, or buy signals. They can extend for a while. But what is a buy or sell signal, which looks like what we have, it's not super convincing yet, but it's a breakdown in the futures here. NASDAQ 100 already broke down. I'll get to that chart in just a second. So here's my there's no benefit of the doubt line because they both intersect around the same level. They're both the same, again, they generate off different points, but we have the S&P 500 breaking down, hitting the 4104 minor support right there, bouncing and back testing and starting to roll over. So therefore, I'm going to call it a sell signal. It's not the best I've seen, but again, this is an extended run, and I still maintain, I think the risk reward, meaning, the chance that with the next 5% plus is to the upside before the downside, that's rapidly diminishing, and I think the risk reward is starting to shift to the downside. Again, the trend is strong. You have to respect that. So at the end of the day, I'm just going to tell you, this could be it. And I do still maintain, as I said yesterday, I think a break below that 4100-ish level in the SPY will most likely seal the deal and open the leg up for another move down. I believe that's about, well, I'll tell you what it is exactly. From where we're at now, that's about a 2% drop to that first target, a little less than that, about 40.55, and then down here to my preferred swing target, about 39.75, and that would be a drop about 4%. So not much, but remember, what I'm doing in this video and what I like to do when trading individual stocks, if you can sniff out the most bullish stocks in an uptrend or the most bearish stocks in a downtrend, much more often than not, I can get more juice on that. In other words, the most bullish stocks will go up more than the S&P 500 in a rally or during a bull run, and the most bearish will go down more. And why is that? Because the S&P 500 is super diversified. 500 companies spread amongst 11 sectors, and you have defensive sectors in there which tend to hold up, maybe fall less or even rise during a correction. And you get more bang for your buck trading the NASDAQ 100 because it is less diversified. It's mostly tech in there, half of the NASDAQ 100. So again, my point here is, again, that's just right now near-term targets, and then we're talking about a 3.5, not even percent, or not even 4, a little over 3.5% drop if that target's hit, less if this one's hit. But again, it could be enough. And I'm starting to see this too, and I'll get off these and get to the trade ideas in a second. It's starting to become more and more of a stock picker's market. It's been a broad-based rally for many months now, particularly off the lows in March of last year. But I'm seeing more and more sector rotation now as the market grinds higher. That's been the story now for quite a while. And sector rotation means one sector, for example, tech, took the lead off the bottom, but then stalled out for many months and actually had weakness. We caught a correction there not too long ago. The NASDAQ 100 fell a lot more than the S&P 500. But then a couple weeks ago, we had that near-term buy signal where the NASDAQ 100 QQQ broke out. And then tech rallied while some other things, such as financials, have lagged behind recently. So that's an example of sector rotation, and so a market like this favors the active trader, or at least a nimble trader that can get out of one sector or stock and jump into another. And with all of that being said, that's where I'll start increasing my focus on individual trade ideas, and continue what I've been doing for a long time is also highlighting lately. It's been different sectors and asset classes such as treasury bonds, commodities, gold, crude oil, natural gas, wheat, and all that kind of stuff. So that's also a way of sector rotating or asset class rotation, we'll call it. All right, that's it. So there it is. I think this is probably the beginning of the correction here, and because we're now moving impulsively off there, I'm going to call that the sell signal, or at least a sign, to make for an objective short entry. As I said before, we're back testing, and you can back test for a while, but what I wanted to see was an impulsive rejection off the back test of the trend line from below in the S&P 500 or ES, and that's what we have now. Moving on, NASDAQ 100. This is what it looks like. Same thing, 60-minute chart. And I believe since the last update, I added this trend line here, which has just been taken out today. So if I put it on, let me go. These are bars. They show a little better on the videos. But candlestick mode here, you can see that. And we've taken out that minor uptrend line right here, and we're trading below it. So if this 60-minute candle closes, that last one closed below, but just a hair below. So I think that what will seal the deal, just like I gave you a level a second ago on ES, this is the level right here. I'm picking that number 13, we'll call it 13,770, because I see a lot of candles here on that level. Even those little ones that go below, if you can make that out in the video, these are only the candlestick shadows, or the skinny part, the tails. That means each and every one of these, all of these candles, 60-minute candles, closed on or right on or just above that trend line, not a single one below. Those are just intra-period dips. That's why I talk often about the benefits of waiting for a 60-minute candle to finalize to prevent jumping the gun on a trade. So that's what we need to see right now. That one did close below, but then we hit that minor support there. So that's the BOD level right there for the NASDAQ 100 futures, NQ 13,772. You want to make it safe, shave a couple points, round it off to 13,770, and that should open the door for a move down to 13,540.60 or so, or it's actually 13,540.50. The Qs trade in increments of a quarter point. I don't know why this charting platform won't snap to the nearest charting quarter point, but and so that would be 13,342.50 instead of 54, and that's a zone right there. What would that give us? That would be about a 2.2% drop to that 13,540 target, and about a 3.5, almost 4% to that next target zone there. Okay, so that's what we're looking for. And again, breaks of this level and that level I just gave you a minute ago on ES will help increase the odds. No guarantees in trading, but it'll help increase the odds that we get at least a minor correction or pullback in the markets, and that should help some of these short trades we're about to roll into right now. All right, so let's get there in no particular order. And if I don't get to it here, I'm watching home builders closely because I should get to lumber at least in this video. Big drop will be coming soon. Lumber is in a tremendous uptrend, and for many reasons, and fundamentally included, that's not going to last forever. And lumber has a pattern of making these sharp runs that end, especially when they end in parabolic runs like it has. It usually doesn't end pretty after that. Okay, so now I'm going to give you just an eclectic mix of all different stocks and different sectors and industries. This one starting out here, that's Signet Jewelers, SIG is the symbol. Here we are. Okay, yeah, the big crash has been averted with the Fed coming in, but you have this jewelry company back up to where it was pre-pandemic levels back here, and most importantly, that's resistance. So I'm going to zoom in a little bit and just show you all those reactions back here. A little false breakout, failure. That's very bearish when a breakout fails. Came back, tested that level again. That level again is about 68.40 or so, and that's it. So this one is an actionable trade. Actionable because you can short here. I like to do short stocks in one of two ways. I either short a breakdown of support or a bearish chart pattern, or I will short a rally into resistance, and then that's what we're looking at in this case. We already had a breakdown of a minor trend line right here. We had divergence building for some time. We broke down. just like the SPY or ES I showed you a second ago, and then we back tested. We haven't rejected off there, but we're back testing at resistance. I would rather short at resistance, keep my stops relatively tight, not too far above that. Minimum target would be a pullback to this uptrend line right here. And from where we're at right now, zoom in nice and tight. That's a green candle, and grab the top of the candle. And depending if and when we get there, you're talking about a 25% drop. So and there's a reaction low, so let me give you a level right there as well. That's probably going to come in around where the trend line is. So you want to, again, replicate this trend line. To do so, I will almost always use log scaling on my charts, and in this case I am. If you're not using log scaling, your trend line's not going to fit the same. So that's what you want to replicate. The trend line comes off the March lows right there. Lots of reactions along the way. A little whipsaw there, but again, enough reactions, and that would be your target. So about a 25% downside to the pullback target, and that's my sole target. I mean, there'll be little stops along the way. I could give you some micro levels if you're interested. Like right there, it's a gap, top of the gap, some minor support. Probably get a little reaction if and when you get there, but again, I just favor a move down to that trend line if you're willing to, give it a little room. And, if you're looking at a 25% gain, then you can give yourself a, 8% stop or so, and that's a pretty nice risk-reward ratio. MARA, Marathon, yep, Marathon Digital Holdings. So you have the uptrend line right here. Same, this is a story on a lot of these stocks. Uptrend lines off the lows from the, back in 2020. And but what you have, let me scroll back a bit here. Hold on. Okay, so what we have, again, this is another one at resistance. There's your resistance level, major reaction high there, some reactions there, with divergences that have been building, getting bigger and bigger. And there it is. So you're at resistance. You already had a pretty steep trend line here. You broke, you back tested, a little snapback rally, and my targets would be 24.37. Remember, these are actual resistance levels. If I give you a chart that says T1 equals, then I've adjusted and I'll set it a little higher. What I mean by that is, if you're targeting a pullback to 24.37, that's support. I'll set my buy to cover limit order a little bit above that in case the buyers step in early. So I'm giving you these what I call unadjusted targets. Next one, 16.15, and that if we get to there, and let's just say that's my preferred target now, we'll come in with that trend line as well. Depends on if and when it gets there. Well, see, when I scroll out now we come down to that trend line. So that is, and that would be my max target right now. So it would look something like this. Reaction off 24.37 if hit, or 24.40, 16.15, probably another reaction, and work our way down to 10.37, and then that's where I might be interested in going long this stock, covering and reversing a swing short position to a long for the next leg up. If hit, that would give us a drop of about 77%. And again, some of you might think that's ludicrous in a bull market. So if you want an easy target, like a minimum target, like I said, is right here, and that's about a 44% drop. So lots of meat on that bone if that one plays out. And again, it's all about risk reward. Set your stop commensurate with your preferred price target as well as your risk tolerance. Some people like much smaller stops, tight stops. Some people allow wider stops. It's up to you. Next one up, DXLG. Again, just a mixed bag of various stocks and various industries here. Here's a downtrend line I probably should have had on the chart before, but that's not relevant right now. What's relevant down here, we put in a big divergent low earlier this year, big positive divergence, which is bullish. Sent this stock ripping up, took out and back tested that trend line. This is the big level right here, 79.29. It's not a penny stock technically because it's trading above $1.24. But it's a trade setup, nor is it an actionable trade either because we're not at resistance. What I have here is this and this form a bearish rising wedge pattern. And so if broken, this one could continue higher, but you can set an alert on the break of the trend line, and I think that'll bring us back to that 79 level. And again, so depends where you'd just be taking a shot at it here, and you could do that, but it's not an objective short entry because we're above support, we're above trend. So again, your objective entry is a break of the trend line or maybe some type of bearish candlestick reversal pattern. Actually, look at this. We did have a bearish engulfing candle right here, but so far a lot of green sticks almost back to the top of it. And again, that's low price, so be careful with that. If you're not a very aggressive trader, maybe pass on that one. XBI, I've mentioned before. I've covered this setup here with a potential head and shoulders pattern right there. Left shoulder, right shoulder, neck, head right here, and a potential neckline. But as I said before, we have support just below there. So that one has to take out that support level to open the door for a bigger drop. And that would be down to about 97.90, I think. Any kickback to 135.60, that was former support. It's now resistance, as well as this 50-day moving average, that yellow line. So that could give you an objective short entry, or break above that could be bullish. So there's an idea that could be traded either way, again, off these levels, but there's pretty good support coming up here. And that's also, if you're a bull looking for long ideas, pull back to that level. It is support. Both price support at about 122.43 and this trend line here. And so that could give you a long entry, or again, you could wait for a break of the pattern and swing it down to 108 and then maybe 90, almost 98 right there. Another sector ETF in there is the semis, and the semis have been, they've been all over the news lately as one of the culprits for a lot of these delays. General Motors as well as other automakers shutting down, and a lot of industries actually shutting down capacity, closing some plants to divert production to their more profitable vehicles because they don't have enough semiconductors. It's going to cost the auto industry billions, they say, this year in lost sales because they don't have enough chips. When the pandemic hit, they started canceling orders, so the semiconductor makers stopped pumping out as many chips. And when Fed came in and took pulled out the bazookas and hit the button on the nuclear option, everything went the other way. So that's what it is. So the sales have been up, but again, they're limited. There's a huge demand for semis and limited supply, and that's what's caused that big run up. But forget about it. Yeah, that's old news. Everything I'm telling you now is old news, and the automakers knew months into it when it started. Everything started to turn, and people were buying cars, and the world didn't come to an end. So you have to ask yourself, how much of what I just said is priced into this move in the sector? This is not an individual stock, just a sector. 167% rally off the lows. Maybe all of it, or at least in the near term. Either way, at a trend line here, right there, that was it was the primary trend line, I believe, and it was the trend line off the March lows. A lot of reactions. We broke down, one back test, second back test just recently. We're rolling over. We did so. We had a divergent high before we broke down, and that marginal new high that we just put in, I'll zoom in real tight for you, extended. It did not negate the divergences. It only made them even larger, and therefore potentially setting the stage for an even bigger drop. So what needs to happen? Well, you can short the back test right here. This is objective because you back tested once and there was a trade to be made, but we made a second back test, and that's not unusual. There's no guarantee that's the last and final back test before a drop, but it could be. So you can short it here, maybe with a stop above the recent highs. That's a very tight stop for the amount of profit potential. And your next objective entry or add-on will come on a break of that secondary, or what I call BOD, benefit of the doubt trend line. And again, that also comes off the lows in March and then captures these two reaction lows right there. And so a break of that trend line should open the door for a move down to at least 366. That would be a drop of 16.5%. And that would be my first target, and this would be a quite likely potential second target, so I'm going to list it. I mean, not to say we couldn't do more, but right now let's just focus on these two. So obviously you have a much higher chance. It's just simple math. You're hitting your first target. But looking at the chart, I know how the semis are, and when it's been a crowded trade lately, and you can get a rush for the exits, and do not be surprised how fast this can fall. And I just roll back in time, and I traded the semis long enough to know that when you get a rush for the exits, especially if it's crowded, it can be pretty quick. So profit potential is about 18% to that target, and about 25 if that other one's hit. Again, objective here, and or on a break of that secondary trend line. Big divergences there too, just like you had some divergence there, but only on the RSI, and it still led to a drop of, back then, that was about a 10% drop. Next, oh, by the way, if you don't short or you can't short because of an IRA or not account, SOXX is the three-time levered semiconductor ETF that tracks that same sector. You know, there's a lot of different sector ETFs for semis, like SMH. Here's another one, Divergent High, blah blah blah. You know, same chart. It's a different basket of semis. Some are the same, some aren't, and they have different weightings. And so you can see your targets for SMH. But again, SOXS tracks the PhilX SOX semiconductor index, which is this one here. So it's the three-time inverse of this particular ETF, not the others. Next up would be MOV. All right, I already gave you a jewelry company. Here's Movado watches or Movado Group. I got whatever else they make. I think just watches, but I don't know. This one, what you have here is a resistance zone from about 3063 to about 29. There's a gap right here, big old gap that helps define that zone. There's reaction highs here. There's a reaction low there in the bottom of the gap. And so what we've done, we hit the bottom and we did consolidate as expected. And we popped on through there, backfilled the gap. That's an impulsive green candle. Now this one, so you're going to look at this and I'll say it. It's actually breaking out today. But I like this trade because I think it's going to be a false breakout, a whipsaw signal, or a momentum fueled overshoot. I think, and maybe it'll prove to be, they'll be right, I'm wrong, but I think a lot of traders see this and assume that's a bull flag. It looks like one, it could be one, and if so, we're going to go up more. However, I think it'll prove to be a whipsaw signal. And so what I like about it, you could take it with a very tight stop, because if it's going to play out, it's going to keep going up. Bull flags, when they break out, the move out of the flagpole is usually as impulsive, whether it's a bull flag or a pennant, like I drew it there, that's a bullish pennant, is usually very impulsive. And so, sometimes I'll take a trade and it's contrary to trading. You should be going long in a breakout, but if you take a very tight stop, you have minimal downside, just a stop a little bit above today's highs, maybe 2% or so. It depends up to you. If you want to go 3, 4, 5, you can do it, because the downside, it would be very bearish if the breakout fails. And if it does, and we're looking at a drop of about, let's see, because I'd be targeting at least a pullback to the uptrend line. I need to, hold on, guys, I got to tighten that trend line up. It drifted a little bit. Let's do it this way. Tighten it there, pull it down here. Yeah, right there. That's good enough. Okay, now I can measure just a little bit more. I'm being a little nitpicky here, but I want to give you the approximate downside target. I would say target about that level, 2561, maybe a little north of that. That'd be a 20% drop. Why'd I put that line there? Because there was these reaction highs and they come in together. So this would be my scenario for that one. Aggressive, very aggressive, because the stock is clearly 1000% in an uptrend with zero sell signals. It's just, again, it's my trading style. I call it anticipatory trading style. I try to anticipate things that haven't happened yet, even sometimes without sell signals, and based on the chart. So that would be it. Again, relatively tight stop, but again, the downside risk or profit potential is big enough that you can easily give yourself a 5% stop loss, and you're talking about a 4-to-1 risk reward ratio to that target right there. All right, moving forward, Tesla. Tesla is bouncing back to that big 802 level. If you remember way back here, I mentioned Tesla is a short on a break below 802, and it broke and it went down quite a bit, and it's now rallying back to that level that is resistance. So, and look at the PPO is in bearish territory. I like to use this 0 line, the dotted line on the PPO, and I like to use that 9 EMA, which is the white line, because that's the last of the two to cross. And I didn't draw that well, but you can see when you're in a bull trend, the PPO signal line is above the 0 line, as it was this whole time. So told you to be long up until about that point. Little whipsaw there, obviously, and nothing's perfect. But again, during a big bear trend or bull trend, it will usually define the trend as it did here. It's all along there. It said bull trend until right about there, and boom, it's crossed below, and you can see it's back testing from below. So that is one indicator that helps support that. You have, first and foremost, and more important to me, the stock coming up on resistance. And to help support that, the PPO signal line, once it backtests, once it crosses below that level, will often act as resistance during a downtrend. So it's too early to say whether we're going to pop above or not, but it helps to support a case on a short there. And if all eyes are on 802, you probably want to short a little bit early. You can make a case to even short right here. I'm going to give that resistance zone because I see reactions there and one right there. So really we're right about at it, right about 772 right now. Short there with a stop somewhat below. I still maintain this target down here, 464 and change on Tesla, and that would be a heck of a drop if it got there, and that's about a 40% drop. Next up, WGO, Winnebago. Yep, everybody wanted to travel the world, spend time with family, and that, you know, played out well for boats and RVs and things like this. Boats fall under this category on this charting platform too, recreational vehicles, which obviously Winnebago is. And that's it. It's just a nice clean up trend line right there. Lots of reactions recently. Big divergent high. And the last time we had negative divergence, it was a much smaller divergent high, but it was still notable. And we had a beautiful little similar thing. It was just a smaller rising wedge, and that's what happened to the stock there. So what you need to do on Winnebago, trend line, and you need to take out my BOD line, which is it was former resistance, now support 7360. That's the magic number. So I'm going to even set an alert there to let me know if and when that goes. That is that previous reaction high right there as well. You can see, you know, stocks respect those reaction highs. Hit it, pulled back, hit it, pulled back, hit it, hit it, hit it, hit it for months here. Finally, there's your breakout candle. It's not just a little wimpy candle, it's a big green candle. And that's it. So that validates 7360 as a support resistance level. And that's why, even though the trend line's right there, and you could even bring that trend line in a little lower like that. But either way, all right, let's keep it simple. There it is. If you break 7360, you've taken out the trend line. And where's Winnebago go? I didn't give you targets yet, but let me do that right now. Let's say right about here, 5872 would be your first target, and the second target there, 4660. Let's just keep those two, T1, T2, and forget about these other two for right now. Let me just take them away. Old levels. Okay, so there's another trade setup. Not an actionable trade, but a setup, and it's close. And that's the thing too. On this one, I wouldn't take right now. Why? You know, why short it here when you have just a little bit downside before it breaks out? So this one, I would wait until the breakdown occurs. I would not take this one now, like some of the others I showed you, because they're at resistance. Ally, A-L-L-Y, Ally Financial. Uptrend line, divergence, broke down recently, like the ES on that shorter term time frame. It's been back testing, just like the S&P 500. Oops, didn't mean to move that line. Back testing. Hasn't made an impulsive rejection off here yet, but based on where we're at, and this one, you know, I think the financials are going to drop along with the S&P 500 if we get that additional sell signal I just told you about earlier in the video. And so you might want to wait for maybe the S&P to break down, and then take a short on this one. Targets, you know, if things get ugly, and they could, then we still have long-term divergences, you know, or divergences on long-term chart. This one could come all the way back to 3350, but that's it's a pretty aggressive target at this point in time, especially considering the trend. So let me give you a first target right here at about 4270, a little north of there. That's some decent support right there. Yeah, let's just do that. I'll update all these if they start to, or any or all of these if they start to pan out. Remember, we're still in an uptrend in the market with marginal sell signals right now, let's just call it. BC, Brunswick Corp, another leisure company. And you know, some of these you'll see the trend line, because there was such a meltdown in the lows, you know, I'm looking at the more recent reactions, and sometimes I'll undercut the lows with my trend line or come a little bit above them, I should say. And that's it. So no sell signal, just one that's building divergences. I mean, it broke out. This is very bullish. You know, we had big resistance there. Tried to break out, a little failed breakout, came back, finally broke out. But it's getting really away from its 200-day moving averages down here and in that level, which it never back tested. So I don't have. I'm not going to even give you targets on it now because it's not an actionable trade yet. Just one to watch. Maybe replicate that trend line. Not one of my favorite, but a lot of potential if and when the time comes. We're going to need to see the market roll over for a lot of these to really pan out. Tupperware, TUP, primary trend line right here. Bearish rising wedge or wedge at the top. Negative divergence. That stock didn't roll over. It broke down. Then put in a roughly equal high, so still a divergent high, extended the divergence, has been bouncing around, failing here, resistance around, what is that, 37.30 up to about 40 or so. We'll call it $37. And recently broke down below 26.16. That's support right here. You can see it's been support for a while. And so this one you could take a shot. See this yellow line right here? It's the 50-day moving average. Look how well it does in containing pullbacks during a bull trend. And then it started to crack here, moving through it, and now we're clearly below it. So the 50-day support, once broken, becomes resistance. You have dual resistance levels. You have that 29.60 price support plus the 50-day above, so you can short it here with a stop not too far. And if you want to add to it, I'd wait for a break below. I'm going to pull this line down a little for you right here, and also give it a price target, $23. That's right here. It's the bottom of this gap back here, as well as the recent reaction lows. So that would be your minimum target, swing target, and actually a very objective level to add to a short if it breaks, because if it takes that out, it's going to take out these 200-day moving averages right here. You have the 200-day simple and exponential. So at minimum, maybe a quick pullback trade if you're only looking for a little pullback in the market, but little, that's about 15% almost. And again, potential for a lot more. This is Tupperware, and Tupperware is back above its pre-COVID lows, or was recently. Again, I don't know the first thing about how the company is doing fundamentally. I know, it's Tupperware. We all know what they sell, but that's a crowded market in my opinion. Let's see. Next up, I want to jump over to a futures chart and tell you that I'm still foaming at the mouth to get a sell signal on lumber. Cannot wait. This is LB 60-minute or nope 2-hour period, 120-minute chart. Here's a primary trend line right here, or uptrend line, which is a minimum target for when this minor trend line breaks. That's what I'm waiting for a sell signal there. And that's a drop of, if and when I get it, it's going to be about 15% or so just to that trend line right there. And we could see a lot more than that. Let me show you another longer term chart. All right, this is via stockcharts.com. Let me zoom in a little bit so you can see a little bit better here. Let me pause the video. Okay, Stock Charts has sort of an antiquated platform. You have to refresh and pick different time, but I do like them because they have some charts that you don't get elsewhere. All right, you have a couple things here. I do want to mention that for whatever reason, this little drop here doesn't exist. I have other charting platforms I'm using that don't have lumber dropping down to this price. I don't know what's going on there. Lumber futures I'm showing are trading around 12.12 right now, which is up here, and they're at highs. So I don't know what's going on with stock charts, but other than that, it's been accurate until recently. Here's your trend line right there. There's an uptrend line right there. This is your big divergence line, big divergence forming, and lumber tends to do these parabolic moves, especially towards the highs, and then boom, big drop. That was a 285% drop there. I don't have that one measured, but it was very big. And again, on clean trend line breaks. So right now we have that minor trend line I give you on the 60-minute chart, and here was a minor trend line, there's a minor trend line, and that's been pulling it back to this larger trend line. But because of these divergences, sooner or later we're going to have not just a pullback to that trend line, but you're going to have a break, and then this would be a first swing target about 825, and if history repeats, you're going to see a big correction in lumber prices. And at that point, I don't want to make the video too long. Last one went really long. I'll get into the home builders. I'll take it on the chin. Some of the lumber companies too, timber and forestry companies. Wood and cut are two ETFs that hold timber and forestry. So we'll, again, when the time is right, I'll bring those up, maybe do a separate video on those. Okay, and finally, just a few of the I mentioned in the other video today. A while back here, was pretty darn bullish on these agricultural input companies. So they're fertilizer companies, for example. That's one of those. A lot of these are, and they've had heck of a run off the bottom. Here we are. Let me change the color on my drawing tool. There's our uptrend line. So this is a trade setup. This is Mosaic. Again, highlighted here. We took out this trend line. Nothing but bullish price action. Big run off the bottom. Big divergence. So you can see my divergence lines. I have the potential, and this is why I'm watching this one as more of a setup. Two ways I'll short this stock. At a run up to this $37 resistance level, that was that previous high right there, and if we go back in time, there's some other reaction highs there. So a big resistance level. Objective short if it can push up to 37, and if it does it soon, it will have even bigger divergence. It already had negative divergence at that last high, and it will be extended if we get there. Or when I say what does that mean? Well, okay, if I short, maybe I short a half position at 37, and then I wait for a break of the primary trend line to short a second half, and then swing it down here 25.50 or so. That would be my give you one more first target. A first stop on this one should be around 29.85, and then 25.48, and possibly all the way back down here to 22.20. These were all upside targets on the way up, which were all hit and traded around, and now they'll, resistance once broken becomes support. So it's time to get ready to reverse this trade for those of you that took it, still in it, and maybe book full profits there and or turn around and short it for a correction. UAN is another ag input company. It was highlighted a while back, and we have a big level right here, about 43 and change resistance. Now you're going to say, well, we broke out, that's bullish. Here's the story. This one put in a big divergent low here recently, and then took out this downtrend line. Since the divergent low, this thing's rallied about 770%. So a nice run. Again, priced into the charts. First thing happened is the ag commodities were taken off, and for whatever reason, the market didn't see it or believe it. I think they assumed it were bear market rallies, because that's what we've had for many years in the ag commodities until recently. So when it came clear to the masses about this point that, hey, these ag commodities are now look like in a new bull market, looks like we've got inflation heating up, that's where these guys played a game of catch up. And of course it was priced into the charts, but you get ahead of yourself. This thing is extremely overbought, and there it is. And so what I think happened or will happen, this 43.17 big resistance, this is a breakout to new all-time highs. Some see, and I'll recognize it for what it is, that's 100% bullish. A breakout to all-time highs is always bullish because nobody is underwater in the stock. You have no remorseful holders that want to just get out, try to get the first bounce to get some of their money back. No, everybody's profitable. So on face value, breakouts to new all-time highs are bullish. However, I don't take them when they have extreme overbought conditions and negative divergence, because they have a much higher rate of failing. And so what I'm suspecting this was and will prove to be is what I call a momentum fueled overshoot. You had tremendous momentum going into the move up to 43.17. So the analogy I like to always give, a momentum fueled overshoot. Pitcher throws a 90-mile-an-hour fastball. It hits the catcher's glove. His glove snaps back from the just the velocity of that ball going into the glove, but then it snaps back forward. His wrist comes back forward again, and so that's what I call momentum fueled overshoot. So look, you back tested it today. So from this perspective, it's a breakout and a successful back test so far. So what you want to do, and maybe that's it. Maybe this thing gets more overbought. That's the one thing about oversold and overbought, is it always can and often does become more overbought or more oversold. So on this one, wait for a failure, and that would be just, let's keep it tight. A move below yesterday's low of about 42.11 I think should do the trick. Yeah, you have the trend line here, and that's probably, buyers will almost certainly step in there. So maybe a quick move there. But if the trend line breaks, and what you can do too is if you get a good short entry and it starts to pan out, put a stop not too far and see if you can break right through that trend line, because that may happen, because a bull trap or a false breakout is very bearish, and because everybody quickly scrambles to adjust once they see the breakout fails, all those longs will close out their position. Shorts, small blood in the water, they pile in, so you could break on down, and that again, that would be the target about 2610. But let's just say first target trend line, and if and when the trend line goes, then 2610 becomes the next likely target. Yeah, I'll leave that there. That was an upside target from before. Next up, CGA, and then we're almost done. CGA was one of my favorites back here a few months ago. We had a beautiful downtrend line. We had a divergent low there, and then it kind of traded around this range. I remember that was a big level. It's highlighting 309. 309 got taken out, hit our first target, second target. I forget where, well, it was mentioned several times in here, but from that divergent low, which equaled that next reaction low right here, you know, this sucker went up. Let me move the line so I can measure. This run so far has been about 550%. Now, this is not an actionable trade. We are in no man's land. We are between my T2 level 565 and then a max target that I gave back then 1435. That was a big support shelf right here. Look how well defined. That's a couple of years of trading, almost 2 years. Super well defined. And when the stock finally broke support, that happened. So I would be very surprised if this thing just kept on trucking right on through 1435 if it gets there. It may not get there. This thing is very overbought. You've got some divergence forming here. But if it does, a rally into 1435, you may get a momentum fueled overshoot. You trade a rocket like this, you're going to need to use wide stops. Take a small position, maybe layer in if it starts to pan out. If you short, let's just say, for example, if you short coming up a little bit shy of 1435, which is where I'd start, and I'd scale into a little bit above it, then, you know, stagger some stops. Not that high. This is not to scale if it continues, but, you know, be prepared for potential momentum fueled overshoot. Also be prepared that a lot of eyes might see 1435 and sell early, and so then kind of scale in that range. And pullback target's hard on that one because I don't really have good support. A trade like that, I would just trail a stop down and let it run for a while, see if you can get 30-40% or more out of it. You know, that's very doable. You know, if you just, you know, a typical retracement, you know, look for maybe a minimum 38.2% Fibonacci retracement. You'll probably get that 34% or more, and I'm talking a retracement off the move off the bottom, or even off this last leg up right here. So, all right. Anyway, well, I'll follow up on it if it materializes. Seed was another one I highlighted back here, another ag input stock. Downtrend line, one little false breakout, put in a divergent low there, and then that's what it needed, and then rocketed up, put in a divergent high, called it down for a correction right there after that divergent high and trend line break. Remember, we had this trend line break, and from that divergent high, it pulled back, hit that 777 target. That was a 46% drop off the divergent high, and from the breakdown point, there was still a drop of about 36%, and you know, bounced off support. It was a great support level. That's why that was a target. Bounced back. These are the levels. It hit 1081, broke out 1081, ran up, and that was my maximum upside target I've had on this thing, or, you know, maximum resistance level, 2848, and just hit it there with a divergent high, and it's rolled over, and then it broke 1757. So, you know, is this the best shot? I wish I would have been watching this one here and pointed this out. That would have been a great short entry, but I just gave you several that almost look exactly like this. So, and it shows you what happens once you get rejected off there. Things can happen pretty fast. So I do think it goes down more. I think it'll probably come back into 1081. If you short it, just don't let it get away from you. Maybe most or all of the corrections already happened, but I don't see anything in the charts right now telling me this one's going to reverse. So again, not one of my favorites right here, but it's an idea and it may pan out. And again, the whole thing about trading, don't pick one. If you're going to trade individual stocks, especially if you're going to trade the indexes, you can go long the S&P 500 and you just bought 500 different companies in 11 sectors, very well diversified. But when you're trading one single stock, I don't recommend that. You know, spread it out, half a dozen or more. you're going to have some winners, some losers, and then in the end, if you're, keeping your, limiting your losses and letting your winners run or using good risk reward ratios, it'll work out for you. I'm going to end the video here. There were some more of the ag inputs I wanted to go over, but this is about hitting my max limit when I get to this 45-minute mark. RKDA was one I mentioned, and this thing is also a rocket. There's been a lot of trades. You just got to get in and out at the right time, catch these trends. But I wanted to point out it's been at support and it's trading at support, so more of a long. But why, with all the other ag inputs roaring, in recent months, up several 100%, why is this one not going somewhere? So I'm a little concerned. I might want to do a little due diligence into the company, because if it breaks that level, that is not good. 250 or 238 is big support. So I want to mention you could go long with a stop below, but really don't put too much into this, because this is the kind of company, if bankruptcy is right around the corner, what happens is it could gap down, and that does you no good. A stop gets bypassed on a big gap. However, I'm pointing it out for those that looking for something that hasn't participated. A lot of people have been fishing for bottoming plays recently with everything going up, and there's one. You can take it with a tight stop because you're right off support now. Do you short it on a break of 238? You could, but you really have to be careful shorting low price stocks like this. This thing can explode on any news headline or even technical breakout. So, all right, we're going to wrap it up here, get these out to you, and we'll keep an eye on the market. Watch those levels that I gave you in the beginning of the video, because those themselves, the indexes, are also trade ideas. This has been Randy Finney with Right Side of the Chart. Have a great day.